Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spotted. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, we just had the ADP. This number widely looked at because it is somewhat indicative of what will happen on Friday, the big number non-farms. Although for the past few years, the relationship between the two has been kind of iffy. But ADP coming out week, 37K versus an expected 113K. That's not very good. So the Treasury market is bouncing hard here this morning. Let's come in and look at the charts and see where we kind of put all this. Also, note we do have ISM services later in the session, so it might still be a little bit of a tight session. Okay, so yesterday, things were going good up until the news. The ISM number, was it? Or was it JOLTS? I think it was JOLTS, actually. And JOLTS was good. JOLTS looked good. So they kind of cut out the gains that we'd made during the regular session, but then later in the day, it was kind of like this thing where it's like going into the close, they just kind of sell it. But again, the ADP here boosting us right back up. S&P 500 had a pretty good rally yesterday. Still not breaking the weekly high though. Oil's at the higher end of its range here. Gold and silver, I would say, kind of a similar story. Man, that rise in silver the other day was pretty wild jump, I must say. Kappa. Okay, that's a little interesting. Japanese yen. Okay, so now that is the flattest I've seen the Japanese yen in a while. And the dollar kind of consolidating around 99. And then last, of course, Bitcoin. Not much change from yesterday. Little bit of a pullback from its highs. All right, so Octavius is long. Good for you. It's a good. Now we are riding the line, by the way. Did you see that here on the cost basis? So right now, remember, if it's a trend day, they'll just ride that line up all day. Right? But if we were to have a pullback, it would be what? 110, 18 half right now? Let's say 19. If we were to get some mean reversion. That's where we're at. I still need to look at this CR charts thing. I didn't have much time to do that yesterday. I was hoping to do it in the evening, but I forgot that it was a birthday, so we went and did birthday stuff yesterday. All right, and I am once again like behind on eating too, so have to eat breakfast here. So let me do that, and then we'll see where we're at. This still looks, the upside is still looking pretty good, though. Oh, boy. It's stacked at 24 pretty quick. And the whole curve moved. Oh yeah, we were reading this article yesterday about neurosymbolic AI. We'll finish reading that. And I don't know if somebody is puking hard long here or what, but this is a pretty extreme move so far. I don't know if that's sustainable. We've seen it happen before, but it's very rare. Oh, it looks like Donald Trump commented on the ADP. He says, ADP number out too late. Powell must now lower the rate. He is unbelievable. Europe has lowered 9 times. Man, I personally feel like that they should lower rates, but I wouldn't read too much into the ADP number. Let's wait for non-farms to cut, because I've definitely seen it where ADP was really, really weak, and then non-farms was like double the expectation, you know? So that's gonna look real bad, Donnie, if non-farms is good, right? Okay, well, they pushed up a little bit more there. Oh, you know what? I'm so dumb. I don't have the robot enabled. Oh, almost certainly would have taken. Now, probably wouldn't have. It would have missed the original trade from the ADP, and I doubt that it would have gotten another opportunity to get it, but we'll see. Let it do the calculations. I would say that last bit of movement was pretty frantic, though, wasn't it? And there is definitely, not only is there size at 28, but there is pretty significant size front running that as well. Honestly, though, you know, it's been a really long time since I've seen this where you get really big orders like that, and then it's stacked in front of it. Like in this situation, given how much we've moved up and how far above the stop out zone we are, I think that it would be difficult to push through that liquidity if it holds. That's basically 12,000 contracts that they're going to have to buy through in a situation where in the last 10 minutes we've moved 10,000 contracts net. Now, interestingly enough, the changes, not, you know what, this actually isn't that interesting, but it's worth pointing out that the front of the curve is really what's driving it, for sure. The 2 and the 5 is moving a lot harder than the 30 is. I'm not really seeing the change in the spread, but I am seeing it in the volume. Come back and look over here on the charts. Like in the 30-year, it's kind of iffy. It's actually maybe net down. Okay. In the 10-year, okay, it's a little bit. But in the 5-year, whoop. Here, let's zoom this one out so that we kind of, okay, so that we can kind of get the same sort of a feel. Okay, so, oh, you know, if we start from ADP, it's actually more like 25,000. Right? 25 plus 15 is 40, yeah. But this one, it's a net 30,000 change in the 30-year. So if you like double the volume there to adjust between the two, that'd be like the same as a 60K net change, right? It's moving a lot more volume, relatively speaking, in the 5-year. Even though if you see the spread, that would be this, like this right here. You're not actually seeing the spread change. But let's just say that the market is reacting very strongly to the ADP number. Perhaps because it is so terrible. Like really, they were expecting, what was it again? They were expecting 113 and they got 37K. That's pretty bad. I wonder what this means for when you put it in context with the JOLTS number being good. So does that mean that companies increased the number of job postings that they had out there, but didn't actually hire anybody? That's a little okay. I don't know. Kennedy Jones's comment got deleted, but he said, I find Musk shifting on Trump one of the most hilarious public beatdowns I've ever saw. I think that you guys get a little bit too excited by like initial headlines on those political things, right? He's mad about the bill, for sure. They're supposedly sending something up. Well, let's see how it plays out. I don't know if that's actually as big of a deal as like maybe some of the headlines are making it out to be, you know? You don't expect to see an account that darn fresh. Well, that's okay. I think you're right. I think you're right. I wasn't sure if it was that you guys were doing it because of that or if he decided to delete it. Was kind of weird. But I agree with you. It's a brand new name. Like, you view his profile, it's new. And the way that he decides to say it is kind of like, okay, why would you come in and just say something so overtly political like that, you know? You cooked him. Okay, I got you. It's all good. It's all good. But it is something worth noting. It really is something worth noting. In this situation, it's actually probably more relevant than we realize, because a lot of the selling is in treasuries is because the market is concerned about how much debt the market is taking out, or sorry, how much debt the government is taking out. And, you know, I think that the net result of this bill that they're putting out right now, at least in the short term, is that the Treasury has to issue even more. And the market is having a hard time handling that. There was a story out yesterday on Zero Hedge. They were pointing out how much buybacks the Treasury was doing, and the amount of buybacks that Basent was doing was pretty high. It kind of made you think. It was like, okay, so if they weren't doing that, where would we be right now? This is a little concerning. So it is relevant to what we're doing here, right? But I don't think that I can really make a solid conclusion yet. So. Oh, okay. So by the way, the robot indeed would have gone long at 25. That's interesting. But we'll see if it continues moving through 28. They're definitely taking a pause. Maybe it could catch its breath. I can see the cost basis, or sorry, like the stop out zone has kind of caught up. So why would you say that today is a 2-tick day? We just moved 24 ticks. Wait, explain yourself. Explain. When you say that, do you mean like I'm just going to take two to 3 ticks? Or are you saying I see something in the market that makes me think that I should only go for 2 or 3 ticks? Because I'm looking in here like, well, man, if I take one, I better get 10 ticks at least. Like, and I think the reason I think that is because it's like, well, if I go long here, it's totally possible that it could come back to 10 ticks all the way back to the open. Like, that's the sort of thing that we've been seeing a lot of lately, right? Like yesterday, that was totally what happened yesterday, right? Was we had the move down, it came right back, or was it the other way? I don't remember, but it completely retraced, and then the news came out, and after the news, it went all the way back down. Those are, I mean, if you catch those are great, but when it goes back and forth like that whole range multiple times, I hate that crap. That is, I think, the hardest to trade. I really try not, so more broadly though, I try really hard to not set expectations for myself in terms of like how many ticks it's going to go. Because everything that I've learned in my back testing says that having set stops and targets kind of just makes your results look like randomness. I'm a pussy. I like my 2 ticks. Okay. So I'm looking for it to get a trend and then see that kind of distribution liquidity whole area and get out there. That seems to be work pretty good, because when you're losing, you can see the flow going against you pretty quickly. It gets to that kind of threshold pretty quickly. And so you shouldn't lose more than like 4 ticks. But then when you win, well, you could get 4 ticks. You could get 6C4, you know? Now, I think if I was trying to do something that was more like market making or arbitrage, then I would be doing 1 or 2 ticks. Risk 2 to make 2 to 3. Okay, so here's the question that you always have to consider when you're doing that sort of stuff, though, right? Which is, how do you deal with the slippage? Right? So if I want to risk 2 to make 2 to 3, if I really, really want to ensure that I never lose more than 2, then that kind of means that I kind of have to have like a stop at -1, right? There's multiple ways of doing it, and depending on how you do it, like if I have a volume stop at -2, well, there's a really good chance that I catch 1 tick of slippage and it's actually -3, and the amount of time that happens is probably too high for the probabilities to work, right? Yeah, let's say volume stop and 2 tick stop loss. I would think that you would hit slippage. You know, I guess I don't really know, but I'm going to guess 30% of the time. Right? So then you can go back into your numbers and you can say, well, if I make 2 to 3, well, if you make 2 to 3 and you get that 30% of the time, then maybe it works out, because then at that point, you know, if you're 50-50, that should be break even. But well, this is why a lot of the, you know, 1 tickers don't really actually work, because I can definitely get into some situations where if I was just looking for 1 tick, I think I could make the 1 tick most of the time. Like, I think I could get better than a 50% win ratio, at least, if not 60% win ratio. But in order to do that, I kind of have to, like, if I'm only looking to make 1 tick, if I were to bail anytime that there was any volume into -1, that's not going to work. So then you actually oftentimes are getting -2, and that's why that trade kind of doesn't work. Do contracts and take off one at 70%. Yeah, well, you obviously don't trade futures, because in futures we don't talk in percents like that. Unless you're talking like 70% be at like the stop. No, that doesn't make sense the way that you said it. But I got to tell you, man, in the back testing, okay, so there's a formula. The probability of you winning is equal to 1 over 1 plus R, where R is equal to the ratio between your average win. Let's not do it with an A. Let's just say W over L. Right? Now, if you're doing multiple contracts, then what you do is you just do that. You break that up for each individual contract. Right? So like this one, you say 2 contracts. One would be the win is 70%. and one the win is at 120. But for both of those, the stop is at 50% is what you said. Right? Then you calculate it that, right? Over a large enough data set, your results will tend to match this, which is basically the risk-adjusted win rate, I guess. That's break even, essentially, right? So in order to really find, like, get a distribution that is favorable to you, you have to do something more complicated, essentially, where you don't have set stops and targets. So I think that set stops and targets are like really good way to start out, but ultimately I think in the long run they hurt you. You kind of have to get yourself into a setup where you're taking what the market gives you, and sometimes your winner is really small, and sometimes your winner is really, really big. You get a good price DCA. I don't know what you mean by that acronym. Oh, how do you get a good price dollar cost averaging? So if we understand our market and we're watching the order flow, that can often give you pretty good entries. So I think one of the things, so the way that helps you the most is that you can kind of see when the volume is coming through and where those sticky spots are. And so if you get it right, you'll get in and you'll never have a tick against you. And if you go back and look in my stats, I don't remember how I was showing this in the stats, to be honest with you, but basically when I win, the adverse excursion is very low. So I tend to catch them and they just, I tend to catch it when it's moving and it just doesn't come back. And when it does come back, those usually, so that allows me to hold a relatively tight stop. But part of that is that I really only get into it when it's something that's really significant is happening. So, but that's kind of the way that goes. I guess another way of putting this is when you look strictly with market data, which is to say your strategy is purely technical, intraday strategy, and let's exclude order flow stuff because that's kind of hard to backtest. We're still kind of working on that, right? So purely technical strategy based on price. There's a pretty significant limit on how any of that stuff helps you. So is there something out there that reduces adverse excursion? We can't find it. I can't find it. I've tried a lot of things. I've never found anything that really significantly improves your MAE. I have found things that significantly improves your MFE, right? The earlier you are in the trend, the more room it has to go. So there's something that can kind of help you in MFE, right? So, and that's where it kind of comes into well, if you're only taking 4 ticks in ZN, that's going to be way, 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 way less than what, that's the minimum move. If it's less than 4 ticks, it's just noise, right? So if you're always taking 4 ticks, then you never get the chance to take advantage of those tails. which means that you have to have something that is purely probability. Like really, it goes your way more often than not. And again, if you're just using the technical data, that's really hard. Would not really find those. I don't know if those really exist in price anymore either. Maybe in order flow. Maybe you're using order flow and you get 4, but I wouldn't know how to prove. We don't have a way to prove that. I don't know what you're talking about, Gio. By the way, cost basis is down at 21 right now. You think they're going to come all the way back? I would be pretty impressed if they came back to the open, given how aggressive the latter part of that trend was. I don't see a link. YouTube automatically deletes links. Sorry. There's like a setting, allow people to post links, and I have it on, and YouTube still deletes them. Yeah. I should have reset the DOM there. Let me center it there. Kind of keep track of this spot. It's opening range. Okay, so if you want opening range, I would go to lizard indicators. I don't have any kind of relationship with them or anything. I would totally do an affiliate program if they had one, but I guess I'll log in here. And then I think that it's under like, well, it's under the all categories I would find it, but I think that they have one that's like session indicators, session tools. Yeah. Opening range. This is kind of nice because it shows you the overnight range and then it shows you the opening range. And I've actually added this into strategies to try and test these like opening range strategies. But my conclusion was that they didn't work. So and now lizard indicators, the way that it works is you should be able to go and download like 2 or 3 of them for free. And then if you want to, beyond that, then you have to pay. So you should be able to just go and download this one. Come in and go to the bottom and go to the download page. Actually, maybe I can copy that link and you can try it. That's an indicator where like there's a couple of different ways to try and do something like that. And they're doing it the right way. If you actually go in and look at the code, it's actually some pretty crazy complicated code in there to deal with all of the different kinds of niche scenarios within that. So for what it's worth, it's a good indicator. It's good to see some life in ZB after 3 years. Oh, there's been life in it since that time. Come on. There is on this pullback, there's definitely been some change in the yield curve though. A little bit, like the ZB came back way more than the others. Look at how far away the high is from current price compared to like CN. Kind of wild. Trade of the week was to sell 5%. Yeah. I mean, that wasn't that. Where are we at in ZB? Well, not showing me. I really hate that these micros aren't there. I wonder if I pulled up like a daily chart of the 30-year, would I even see stuff then? Because I think there are a lot of days where there's just literally no volume in it. $30YR. We go to day bars. 1 day. I'm not even sure if that will load anything. Well, it still says loading. That's not very encouraging, is it? Oh, okay, okay. Oh, man. So it's like some days just aren't even trading. Oh, that's because it's not giving me a bar every. I don't think it's giving me a bar every day. See, it's skipping days. That's pretty wild. But if we say right now it's 4.896. So like, let's call it 11 basis points. It's not terrible. Yeah, and there it's kind of, once you start to see it on the daily, then it's kind of like, well, it was way up here like really 2 or 3 weeks ago now, but yeah. But my question is, what's causing that? Would that line not be there if it wasn't for the Treasury Secretary? Kind of seems to me that it might be that. In which case, that is a really great place to sell, isn't it? Well, to buy the treasuries, sell at rate, but yeah. Good morning, Ann Steffa. I kind of feel, though, we come over here and you look at it this way. I think that the like longer term technical signal is that you got a bottom here. This was the place to buy it. We may yet go lower, but in the end, I think that we're gonna. Doesn't seem to me that the market can sustain these rates. I'm seeing too many sections of the economy just really, really struggling here. I think that they need to bring the rate down at some point. By the way, on that pullback, they did not quite make it back to the cost basis. They came about 5 ticks short of it. And now heading back up. But again, we've got the services PMI number at the top of the hour. And we got the S&P 500 opening up in a little bit. So we'll see what the SPOOs do. Sam Altman says next year AI won't just automate tasks. It'll start solving problems entire teams struggle with. Okay, Sam. You say so. I think they kind of said that last year, though, didn't they? When are they releasing the new Jigsaw? Who knows? When it's done, I think they kind of have a when it's done mentality. They did put out a new version a new version of the beta at least last week though. Or was it the beginning of this? I don't remember. It was within the past week. What is new about the new Jigsaw? So it is like a new, they're calling it version 3.0, I think, right? So there are a ton of changes. By and large, I would say that most of the changes are not necessarily explicitly new features. As much as it is more a reworking of some of the stuff underneath. So the biggest change there is like the Vista chart. The Vista chart was always kind of slow. If you tried to like resize or move it around, there was all sorts of issues with it, right? And now they're kind of doing it the more proper way. It's much more performant. And, you know, there's lots of little bonus changes that are like, you know, new little settings and things like that all over the place, but they're small. I don't know. I guess it's partly because those little features are all things that to me are kind of like, whatever. I still want the biggest thing for me would be able to have spread charts in Jigsaw. They really should add a spread indicator. I don't think that would be too hard. And then the next one would be a market analyzer or a watch list. Having a watch list where I could like recenter them and it would tell me how much all of these assets have changed since the last time I recentered all of my DOMs. I think that'd be so useful. That's probably the single best feature they could add into Jigsaw. But that would require a whole new component. I don't know when they're going to do that. And I think at this point, they're kind of like, you know, Jigsaw does the things that really matter. And so they are just kind of adding little things here and there that kind of are more to attract people to the platform. Fair enough. You should be able to lay correlated instruments on the same DOM, like volume profiles or current trades. Maybe. I think that would get kind of weird. Like, I think when you start getting into that sort of stuff, there's lots of little nuances that have multiple answers to them, and it's not clear which one is the right one. You know? So like just as an example, if I combine the liquidity between ZN and ZB, you know, and I want to read like how much of the volume is in the spread, how do I classify volume as having traded in the spread or not? And you know, it could be that just when there's volume in both the instruments, like I see buying here and selling here at the same time, then that counts as spread volume. And like, okay, does it have to be like exactly at the same time? There's, you know, it's just all those little things that two people could come up with completely different answers. Well, it's gotten pretty quiet now. Hmm. Okay. Okay. I think I finally figured out all of the little things I was looking at with Sierra charts and Amazon here. So, do you think that using gamma levels in ZN options could help with determining the direction of movement? Well, so options can definitely be a useful indicator, but I don't think that it helps you quite as much in, or at least the gamma levels don't help you quite as much in the treasuries as they do in things like ES, because the issue is that all of the gamma is basically at half a point. So it's going to be at 110, 110, 16, 111, 111, 16, right? And where the majority of the open interest is going to be is often just like where we've spent the most time that week. So that doesn't necessarily tell you anything, nor does it really give you a good idea of like, oh, you know, once we pass this spot, the gamma flips and then they have to sell it and that keeps it going. And I just don't think that that's quite the same effect in treasuries from my understanding of it. Now, what is end up being really useful is looking at the order flow in the options, seeing live which options and strike prices and so forth are actually being traded, because that can in some instances precede the order flow in ZN itself. But then you're talking about something really complicated, like it's hard to get data for and it's hard to analyze and yada, yada, yada. So it's kind of a little iffy. You get that data through E-Trade, but it is hard to analyze. Yeah, you know, like there are definitely stock trading platforms that give you the data, but I have not seen a platform that really gives you like an analytical way of like analyzing those flows as they come through, you know? Like I think the raw thing would just be show me every market order that comes through regardless of which option it's in. But that would be like a mess to try and watch by hand, you know? So then how do you generate metrics that give you a good enough idea of what's happening live? You know, there's definitely like metrics you can see like the open interest, which strikes have the most open interest at the end of the day, but you know, like just as the orders are coming through, I don't know how you do that. Screen for big prints, that might help. Yeah. Well, we spent quite a bit of time at 25. Now we're touching up on 26. It's not necessarily a huge deal, but maybe some people buying going into the PMIs. Well, I tell you what, if the service PMIs are, let's not say bad, but like, especially if prices are low, you know, because that's kind of where we'd been seeing it, is that companies have been taking it on the nose, but that's mostly been coming at the expense of services, final demand services. So I would expect the services PMI to be a more interesting number. And if you get into services and prices are down, it pushes treasuries up further through that massive order at 28. You know, then we start getting into some of the more wild scenarios, don't we? There's the poll. Make sure I got my financial juice going here. Looks like this whole time it wasn't connected. Silly me. So, PMI, they're looking for 52. Prices paid, they're looking for 65.1. I think on this one, I'm going to pay attention to that prices paid a lot.
Order submitted.
Woo. Okay, interesting. So prices paid was higher than expected, 68.7 versus 65.1, but services PMI overall was lower than expected, 49.9. So in contraction versus the expected 52. And they really jumped on that, didn't they? I mean, they just... where was it that we started at? 25 was 25, and there was the big orders at 28. There has been 6,000 traded at 28. Wow, that was a lot of volume on that too. Wow. Look at how many big prints there were through it. So like, there was actually more liquidity that held through that than you would have thought. Well, man, I do not know how to deal with that one now. Because the prices paid was still a little hot. So I don't think that the number is probably quite as clear as it might initially seem. Like, the main headline number being below 50 is definitely significant. Okay. But I don't think that that's one that's like, okay, we can just take this wherever it pulls back to. We take this and we hold it all. Probably not that clear. And you probably got this whole area now between 27 and 25 that wouldn't be too hard for them to clear. So maybe they pull back to that, and who knows if they continue back up after that or what. But I don't think I got a trade off of that. My robot, which shouldn't be taking trades at this time, seems to have gotten in at 110.30. So it's losing pretty bad off of that. But it shouldn't be taking a trade. Like, it should be waiting at least until a minute afterwards. So what's with that, robot? I have to investigate some of this code still. So should not, and maybe I just don't have the settings right. Maybe I don't have the, in fact, I don't. I don't have the things turned on that prevents it from trading menus. Geez, Seth. That's smart. All right, guys. Well, I should get going. I will see you tomorrow. Stay excellent, team.